Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. Yo, I'm back from the scrap with another mean verse, rolling past through the back in another green hearse, carting out the money cause it's time for rebirth. Yo, another day, another dollar, and it's time to find another way without a collar and another rhyme to have my say and never falter. Yo, I'm just in time to see the future as it peers through the dust and grime. Lot of problems gotta fix, yo, decentralize, throw your hat into the mix and conceptualize. Systems are corrupted, but we know they're cronies fine. Today we're talking DeFi with the homie Tony Cai. Did you know that the kids are dropping USD? Watch a video of Todd Stritches swapping TLC. Plant the message deep down like a seed, and I'm colder than the storage that keeps my money free. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. As I said, Tony Cai, founder of Atomic Finance, is our guest. We'll talk with Tony about building DeFi on Bitcoin. It's a fascinating conversation. And of course, we'll check in with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk markets. But before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. I just have to follow up. We're watching the Sam Bankman-Fried trial. And Finn, did you see that Caroline Ellison, his, I guess they say on and off again, girlfriend, but also the former CEO of Alameda, she was asked what Sam's ambitions were.
Yeah.
Did you see that?
Well, we've been waiting for this moment, right? This is like a critical element to this case.
Yeah.
And her participation is like, you know, the make or break. I mean, the whole case is
I agree,
it's
but
a slam dunk, you think, but
yeah, she is a key witness, absolutely, for the prosecution. Yeah. She was there. They not only worked together, and she was a top lieutenant, but they dated, right? And in fact, lived together, she said under testimony.
And she took the stand, and as an avid follower of the transcripts in the courtroom, do you want to tell us some of your...
Well, so she said they asked her what Sam's ambitions were, and she said to be president. And the prosecutor said, president of what? And she said, the United States.
I mean, you know...
Can you imagine?
We're learning so much about the personality behind Sam Bankman-Fried.
I mean, it's truly, I agree. He is some kind of hyper ambitious, but also introverted kind of guy, clearly delusional. I mean, president of the United States. This guy appeared in Congress well before the collapse of FTX. He couldn't tie his shoes. There was a famous picture of his shoes. They were like a rat's nest. It's like,
and
I don't think you can be president if you can't tie shoes.
And as your producer before the show today, I said, do you think there's value in us addressing, or you addressing like the implications for the crypto markets or the landscape of the industry? And you were kind of like, we've been there, done that a little bit.
Yeah.
And this is now just sort of a story about this case. And it's not as relevant to the world of cryptocurrency and markets.
I've really yet to see anything come out so far in the case that is market impactful at this point. I mean, right, the market really fully deleveraged off FTX's collapse over the last year. So one more thing that I wanted to read. The prosecutor said to Caroline, he said, why did you break up? And Ellison said, well, he wasn't spending much time with me. The prosecutor says, was it secret? I think meaning the relationship. And Ellison said, at first, then he told me we could say we were living together, but no more. Then they immediately asked, what was your salary? Caroline says, $200,000, then a bonus in 2021 of $20 million. Must be nice. I mean, by the way, I'm pretty sure that $20 million, like basically everything that FTX did, came from client accounts. So
there you go.
Not great. Not great.
Not great.
All right. Hey, thanks for listening to Galaxy Brains as always, everyone. Let's jump right into it with Beimnet. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So, Bitcoin and ETH are not doing great.
Yep.
We'll talk a little bit about any effect that we've seen from the attack on Israel. But what is the status of markets in your view right now?
Crypto markets trade heavy right now. There is a very distinct sort of dislike or lack of favorability for ETH right now. ETH BTC is down pretty meaningfully over the past month, around 10%. Some of it has been because the FTX exploiter has been, TWAPing some ETH. But I generally think it has to do with the fundamental case for ETH as well. The lack of follow through on the ETH futures product, in addition to a lack of any meaningful positive catalysts in ETH. In addition, you have competitors and L2 tokens, etc. And I like to think that I think Bitcoin's got a great story and it's going to outperform. It's going to be one of the better outperformers this year if you get an ETF or going into Q1. And so just on a relative basis, it doesn't seem that compelling. And then with broader markets, the main concerns were obviously around the events of the weekend in Israel. The immediate reaction was oil jumped from $82 a barrel to 86. And you had some correction in equities, and we've eventually bounced back. And then ultimately, it's led to a little bit of a risk-off move in treasuries, and we've caught a bid. And that relief in treasuries has helped generally support price action in equities,
which is like the opposite of historically how it typically would be.
And so now I think we go back to what was originally driving markets, which was this price action in bonds, and you've got a really important data point tomorrow in the CPI.
Right.
And so, I think if you get a soft number, you'll see, continued relief in bonds, and that should cause, equities to rally. High level, though, I think you're just at such a weird place in markets. The part of me is like, oh my God, there are so many things cracking. Look at credit card delinquencies, auto delinquencies. Look at the number of people that have part-time work. Look at, wage growth, coming in a little bit lower. Like there's so many signs in the economy that, we're rolling over a little bit. However, the structural things just have not changed in the economy. Like there's going to be tons of bond supply. And the government is probably going to spend 6% of GDP on their deficit, in perpetuity. The labor market is still tight in terms of there's still huge mismatches, among skills and labor. In addition, there's 9 million job openings already. We just had a huge surprise in JOLTS, and so there are signs that support both arguments. And ultimately, I find myself in the camp of, the curve has got to steepen. If you think that the economy is going to slow down, then the Fed's likely going to cut more and you'll get more cut pricing. That should mean that twos rally. And you still have tons of long end supply. And so, the curve steepens. If you think we go higher in rates because the economy is really strong, the Fed came out this week and told you that moves in the back end, right, or effectively tighten financial conditions to the same extent that a rise in front-end interest rate does. And so it seems like if rates are going to go higher, right, in general, we're going to get a bear steepening of the curve. And if rates are going to go lower, you're going to get a bull or a bull-bear steepening of the curve. So either or, it kind of seems like you're set up for steepening, and that's kind of my bias at the moment. But it's really tricky, especially now that you've thrown in a geopolitical conflict on top of that. In addition, I genuinely, I think the Fed's making it up as they go, just responding to these data points and stuff. And, the fact that they felt obligated enough to have 5 Fed speakers comment on the extent of the back end, selling off, like when it's totally justified and when you're still hiking, right? You're still telling the world that, you might need to hike, you might need to take rates more, financial conditions more restrictive, and yet you feel the need to comment that it might not justify hiking in the front end. Like it's so messed up. And part of the interpretation of why back end yields have risen is because some market participants view the current Fed as one not willing to fight the most important battle with inflation, which is the last mile, right? If the Fed right now is like, oh, we're close to done, and they're not showing that vigor to really stamp out inflation, right? Then that means inflation is going to be an issue in the longer run, potentially. And so I think that that's a kind of
That's interesting.
a reason for some of the sell-off in the curve, because market participants, like the whole 10-year paper or 30-year paper, you need to be confident that you're getting real returns that are meaningful. And so
people are doubting the Fed's resolve here as we're in this like
I am absolutely,
and we're in this hike regime right now where they're sort of sputtering along, kind of signaling they might be close to done, and yet inflation is still elevated. Although that's why you're saying big number tomorrow to see what CPI.
Yeah, and it's also, I mean, we've had this discussion before, but what people still fail to realize is the Fed is going to claim victory over getting the rate of price changes to a reasonable level. Right. So that the price increases are somewhat more manageable.
Right.
It does not address the fact that certain aspects of the economy, and certain price levels, have gotten to astronomical levels. Right. So if rent in New York or in anywhere goes from $1,500 to $3,000, rent doubled. Right. And then starts going from $3,000 to $3,100.
Right. That's a win in their mind.
That's a win in their mind. But it is absolutely nonsensical, because the real incomes haven't actually kept up for those price levels. And so you're just in such a weird situation, and the Fed's going to be quick to declare victory because they have a huge issue, which is 6% of GDP going towards deficit spending.
They've got to
year.
lower those rates if they can, as soon as they can, basically.
Yeah, because
they can't keep them higher for longer. They just can't. The government will essentially bankrupt itself, or
the Fed's going to have to just start accumulating, buying the bonds, and so it's such a weird situation. What is victory?
Yeah.
What does victory look like?
We've talked about this before too, about how the decline in inflation actually means a slowing of the growth rate of inflation.
Correct.
Versus it doesn't mean things go
deflation.
back to the way they were.
Correct.
Deflation. I'm thinking about that great video of quantitative easing explained from Omid Malekon, where they're saying, but isn't the price of milk higher than a year ago? Yes. Isn't the price of airlines higher than a year ago?
Have you seen orange
yes.
juice prices?
Exactly. And airlines too, just recently too. I know the last couple CPIs, they were elevated a component, and I'm seeing that as I travel. I mean, prices are almost double from where they were 6 months ago for basic commuter flights.
This is another debate, but are we even measuring the right things? Do they capture the is the CPI basket really indicative of what people actually spend money on?
You see people. There was a video that was going viral from TikTok. I saw it downstream of TikTok on Twitter or X.com, and it's a guy going around Costco comparing all the prices, being like, "Dude, these are ridiculous."
Yeah, way higher than they were.
And not 3-4%, 5%, 20%, 50% higher.
Correct.
And this is, Costco is a large wholesaler, right?
It's they got the best prices.
Exactly, exactly. That hot dog, I don't know how they keep that hot dog at $1.50 though.
I think it's $1.99, but
did they raise it? No,
is it $1.50?
Whatever. I think it was $1.50. I'm not sure, but it's been flat for decades. Anyway. Yeah, it's a tricky situation.
It's tricky, but I just, I what I want is just a level of communication from the Fed that's a little bit more factual, not more factual, but just speaking to people, being we just have such big, they can't acknowledge the fact that I guess the deficit spending is totally out of control.
They're not talking about the deficit.
Because apparently, they've got no control over that, so they only respond to whatever.
Even though these are revolving doors, the prior Fed chairperson is now the Treasury Secretary. It's the same.
Insane.
And they can't acknowledge to regular people the truth, which they and the government should be clear with. Prices aren't going to come down, most likely.
No, they're not.
They almost never do.
Yeah.
And in fact, the Fed's terrified of deflation as well, right? They think that's a huge impediment to growth, long term.
No, absolutely.
Right. So not only won't they really can't. They don't want them to come down. But I don't think people. You hear this from both people in government. You hear it from you don't hear at all anything from the Fed. But declaring victory against inflation when it'd be great if people were clearer with.
No, absolutely. But then there's just
the market knows this.
Then there's just the obvious stuff that we can. This is a topic for another day, but you're gonna have social unrest or social issues at some point. These policies in general lead to widening wealth inequality. Right. If nobody can now afford a home, it's all the homeowners are gonna do great.
And even the deficit spending and the debt has been like a macro watcher's issue, but as that interest payment grows and grows, it'll become a real significant issue for fiscal allocation that really does impact a lot of what they can spend money on.
Absolutely.
And that's going to
like
cause
what are
issue.
the things that like people tend to cut first? They
don't cut defense first.
They don't cut it's like the marginal programs that help the needy and stuff like that. And just it's
right. So the pain will start to be felt. You're right. There'll be more pressure over time.
And it's also like what's going to perform well. Like equities are going to do okay in the environment. Like generally, like assets are going to do fine. And if the Fed starts cutting again, like it's assets.
And then we're right back to where we were.
You're going to have the inflation
the
again.
asset owners growing
so
wealthier.
Here's the real crux of the issue is the risk of reinflation.
Right.
Right? And
it's
like
that chart from like the 70s and 80s.
Arthur Burns and Paul Volcker, right? Like it's
that's how you go into like multi-decade financial and economic hardship as a country, right? When you just constantly are oscillating. I mean, inflation got as high as like what, 20%, or was that one print? How high did it get?
I think
very high though.
I know interest rates
interest rates were up in the 20s.
Yeah. And so I would think
because that was one of his ideas too, right? That you had to raise rates above the inflation rate.
That fundamentally every time you wanted to get inflation down, you got to get it above.
Right.
But it's like it's a hard issue, and I think that the trades are easy, which is long Bitcoin because the fiscal stuff ain't changing anytime soon, and gold, and Paul Tudor Jones on TV yesterday making a great case for the two. I would recommend that clip.
Love to see Paul back out here talking about it.
Yeah, let's get Paul on Galaxy Brains.
Give him a call.
And so I don't know if the market has such a nuanced understanding of it. Frankly speaking, like I think a lot of equity investors just woke up to bonds like a month ago.
Yeah.
And what it means, the shape of the curve and stuff. And so some of these points are probably not as appreciated right now, but 6 months from now, 9 months from now, a year from now, I think they'll come to a head.
Yeah. Beimnet Abebe from Galaxy Trading. Thanks so much, my friend. Let's go now to our guest, Tony Cai from Atomic Finance. Tony, welcome to Galaxy Brains.
Happy to be here, Alex.
Yeah, great to have you. And I'm really excited to have you for a variety of reasons. But one that I'm very interested in, I think as our audience knows, about this growing culture of building other stuff on Bitcoin.
Yes, sir.
And Atomic Finance is a Bitcoin DeFi company?
Yeah.
Bitcoin DeFi company.
Bitcoin DeFi company.
So tell us what it is first and tell us about yourself, Tony.
Yeah. So, Atomic Finance, we're all about building sound finance for sound money. Some people like to call it Bitcoin native DeFi, but we like to call it sound finance for sound money.
Love it.
Basically, trying to build financial tools that are just as self-sovereign, transparent, and verifiable as Bitcoin itself. And basically our first product right now, our initial product is a mobile app where folks can earn a return on a portion of their stack using covered calls and DLCs. And so I'm sure we'll get into both of those things shortly. But that's kind of the high level. And basically we started Atomic a couple of years ago when we kind of saw that hey, Bitcoin is the biggest crypto asset out there, most trustless base layer, but there's no DeFi, right? So Bitcoiners like you and me, we have to, use CeFi, centralized finance, custodial products there's all sorts of counterparty risk that comes with that. It's a black box, and that's what we kind of saw last year, right? And so, let's build out some more kind of non-custodial alternatives.
Yeah.
And that's kind of how we started Atomic.
It's very cool. And you worked on Ethereum before Bitcoin. So you came to Bitcoin from the Ethereum world.
Yeah.
I feel like we don't hear that very often. Why or how?
Yeah.
How did that happen?
I mean, I probably go on for hours about this, but it's been an interesting journey. I would categorize myself as a Ethereum DeFi dev turned Bitcoin maxi turned open-minded Bitcoiner. So I'm kind of so basically so before we were building this kind of ETH DeFi product, it was like cross-chain lending product and all that kind of stuff. And basically just around DeFi summer time when, yield farms were, everybody was setting up their yield farming and all that kind of stuff.
Yeah, yeah. It was an exciting time.
Yeah, it was.
Yams, the poor yams, they failed. I remember yams quite well. It's one of my favorite projects.
Yeah, but
what a saga.
Basically, like it was just like I was kind of like I remember myself like I was like sitting in my office. I was like, kind of like that was also when I just read kind of the Bitcoin Standard. So it was like, okay, interesting. There's something unique here about Bitcoin that I don't think Ethereum or what have you is able to replicate in terms of how decentralized it is and basically it's kind of like weird because it's like, okay, all this money printing is happening and that kind of goes against what I see as one of the big value props for Bitcoin, right?
Yep.
The hard cap and whatnot. And so it was just like, okay, well, does it make sense to keep?
You got pretty well orange pilled, it sounds like.
I guess I did, right?
Yeah.
Like, so I guess I got pretty well orange pilled, and I was like, I don't think this makes sense to kind of play the yield farming game to stay in the game because that
was the game at the time too. Yeah,
exactly. And so, so we decided to kind of do a little bit of a pivot and kind of look on the Bitcoin side to see, okay, well, what is there on Bitcoin that we can possibly build on to kind of build out DeFi tools and whatnot. And that's kind of how we encountered DLCs.
Yeah, let's talk about DLCs too. But I have more on this ETH Bitcoin journey and story. But let's go. We mentioned DLCs. Let's explain really what you guys are doing and what DLCs are. So, discrete log contracts. That's what they're called, right?
Discrete
DLCs. What is this?
Yeah. So they're this concept. It actually emerged out of. So Taj Dryja, he is one of the co-writers of the Lightning paper.
Yeah.
DLCs is kind of his baby. It came out of his research during that time.
What didn't Taj do? He's got
know,
UTXO. He's Lightning paper with Joe Poon. I mean, I saw him actually a couple weeks ago in Nashville.
Oh, really?
He's great. He works with David Marcus at Lightspark now. I mean, this guy is a Bitcoin genius.
But I would say he's a bit of an unsung hero.
I think it's just not sung. I don't know why it's not sung.
I mean,
when you see the guy, he literally
Yeah.
invented Lightning, basically.
Yes.
Like, I mean,
Exactly.
among other awesome stuff. Anyway,
Yeah.
I'm just chuckling because I agree. Taj is epic. He was at MIT's Digital Currency Initiative for years. That's how I knew him. And I didn't know he had anything to do with DLCs, but now you're telling me this is also one of his projects.
This is also one of his projects.
Okay, so not to interrupt. Sorry, go.
No worries. But so basically, the idea behind DLCs is that they enable peer-to-peer, quote-unquote, smart contracts. Now, they're not the exact same kind of smart contracts that you can see on Ethereum, and there's some trade-offs. So, for example, the simple thing about DLCs is that you can use it to encode the financial instruments like futures contracts and options contracts. For us, we decided to use them for options contracts. But basically, like, if you compare it to something like Ethereum smart contracts, basically you can't do any pooling of funds. So, you can't do a Uniswap.
Everything's like bilateral.
Yes. There's always two counterparties, right? So peer-to-peer. You can't do like a compound finance model where, you're pooling funds. But basically, like, the trade-off is that, with that, you don't get any sort of honeypot attacks at the same time. They're very on-chain. The on-chain footprint is very, very simple and clean. It's just like a 2 of 2 multi-sig on-chain with an oracle attached to it. So basically, you can use it to represent any sort of financial instrument that depends on some kind of real-world outcome.
So between like a dealer and a client, for example, like I can buy an option from some party, whatever, and they can sell it to me, and then a third-party oracle just determines the outcome and then releases the funds one way or the other or whatever?
Exactly.
Basically?
Exactly.
So it's multi-sig with oracles.
Exactly.
And you're saying that together can let you do a lot of interesting stuff.
Yes.
And it's if it is peer-to-peer, it's not just that it's good for you honeypot, like, so from a security standpoint, it's better. It's also private. Like, you're not like going to you might be able to see some footprint on chain if you examine the entire blockchain, right? But it's not like you just like go to like app.uniswap.org and like look at it, right? Like, because it's I could just have one right now. Me and Phineas, he could owe me money, could set a thing, I could give him a plan to pay me back over a period of time with interest, and if he doesn't do it, the oracle seizes his collateral or whatever. You hear that, Phineas? He's giving me the thumbs up. We're gonna get Phineas mic'd soon, I promise. So so you're doing options. Explain the covered calls with this scenario here. What people are doing for.
So basically, like, in our initial V1, folks are able to enter basically a cover call passive strategy. So with cover calls, let's start with the cover call part first. So cover calls, they're a type of option strategy where basically folks are able to earn a premium or earn a return by selling upside on their Bitcoin. And so, with options, there's a bunch of different strategies in terms of, you can, kind of a conservative income generating strategy like cover calls. There's also, of course, like speculative strategies like long options like that. We chose cover calls first because they are one of the most conservative strategies out there in terms of options, because you always end up either with more Bitcoin or you end up with a Bitcoin stack that's worth more in dollars, right? And so there's no risk of like liquidation. There's no risk of like getting wiped out or anything like that. And so that's the cool thing about cover calls. They're one of the more conservative strategies out there. And they're very kind of commonly used income generating strategy in TradFi with stocks and other assets as well. How we decided to kind of implement it initially was we wrapped up cover calls in basically a passive strategy where basically it's more like a one-click, almost like a DeFi wallet, if for folks who are familiar with that. Basically one click, send Bitcoin in there, and then basically it kind of relies on a automated passive algorithm to basically enter into covered calls. And moving forward, kind of like we're looking at different ways for folks to be able to, do manual options for folks who are a bit more adventurous.
Right.
But initially, we found that with our early adopters, folks who tend to care about non-custodial, they're not necessarily traders per se.
Right.
And so we wanted to make something a bit more simple and passive.
Yeah, it's very interesting, and it is the type of stuff. Of course, it makes a lot of that a lot of people do in DeFi, right? And certainly had done, right? Just generating yield off collateral.
Yes.
The way they're doing it there primarily is putting it in a pool and letting other people pay to borrow it back from the pool, take it from the pool. Like you said, that's been hacked a lot, and it's risky, and it's just different. Right.
Yeah.
Covered call strategy is very interesting. And it seems very fitting for a very peer-to-peer setup too, because you can just replicate it. Like you don't have to have everyone doesn't have to be in the same strategy, right? They're in the same exact pool. Are you seeing interest then? So like how does one? So I have an app. You have an app.
Yes.
So if I want to do this, I can go into the app and it's like basically a wallet and it says send Bitcoin here and then like push go or whatever.
Pretty much.
And then on chain that Bitcoin gets put into one of these 2 of 2 multi-sigs that. And who are the holders then? Am I one of the holders?
Yes. So the user is one of the holders, and then the other holder would be our market maker that we work with.
Whoever the counterparty ends up being to sell for this trade.
Yeah.
And then the Oracle, so it's a 2 of 2. The Oracle doesn't have a key,
no.
So so they just tell what you guys or who do they report to? The Oracle.
They basically like make an attestation, and then basically the DLC is able to kind of use that attestation to release the funds.
Oh, wow.
Basically. Yeah.
So there's a cryptographic, they're unlocking the key a little bit here?
Yeah, pretty much.
So it sounds almost like a thresholded 2 of 3 or 3 of 3, but you're saying that it isn't actually, and this is maybe beyond my technical capability. It is a 2 of 2, but there's
2 of 2.
It's like a lightning channel where the attestations get like part of the script that unlocks the coin one way or another.
Exactly.
That's
what's different between this and say a 2 of 3 is that if there's if say like the Oracle, they disappear. Well, then basically like you have a refund clause, and then basically both parties can get their original amounts back, and so you kind of protect against that edge case.
I see, because if they disappear, now me and the counterparty have to collaborate to get our funds back, like because we're the 2 of 3 now, right?
Yeah, exactly.
Yeah, it sounds really interesting. Are people is people using this thing? I mean, it's a simple thing. Like, are you seeing good adoption of this product? It seems. I mean, earning passive yield in a relatively conservative way and in a, at least partially non-custodial way, right? That sounds pretty compelling.
Yeah. So we're in beta right now. So we're on Apple Test Flight, and so getting our approval at the moment with the App Store. But yeah, like so far, basically lots of interest from Bitcoiners all around in trying out this product with a part of their stack. It's one of those things where it's like DLCs, completely new concept. 9 out of 10
you got to do a lot
Bitcoiners
of
have-
explaining, right?
Exactly.
Yeah.
It's a bit of like, that's the tough thing about, doing something very different from the status quo,
Right.
Like people are always going to question what is this?
In
and you gotta
particular in
educate.
Bitcoin too, right? I mean, other communities.
People are very skeptical in our
other
space.
other people, other communities
Yeah.
are more willing to try new things and
Yes.
innovative. Bitcoiners very conservative.
Yes. Well, maybe that might be changing slightly in terms of the ordinals movement.
Yeah, I don't know if the conservative Bitcoiners are
Yes,
changing, but a
that's
lot
true.
of other new people
Yeah.
are coming in and becoming Bitcoiners with different ideas. I agree.
Yes.
So,
Yes.
so it is changing.
Yeah.
On balance, I think the culture, but it's still quite true. It's also one of the best things about Bitcoin that it's
Yes.
hard to. But yes, that presents, I can see a challenge. You got to do a lot of education and outreach to explain how it works
Yes.
and explain the safety. I definitely think when you compare to the CeFi of last year, and that we mentioned, like, this is a very compelling response to the stuff that happened to a lot of Bitcoiners who, to your point, like, there wasn't anywhere. If you wanted yield, right, you either had to use you couldn't use your Bitcoin. I mean, you could theoretically try to wrap it in some way, but mostly people went to all the centralized lenders, many of whom collapsed.
Yeah. Well, like,
Because they weren't transparent, and it's not, and they were pooled, or
Yeah.
some of them were even hacked.
some of them
abroad.
were even just going and I think playing around in some DeFi.
Like just taking the money and doing something else with it. Yeah.
Yeah.
And this
yeah.
is much more transparent and decentralized.
Yeah, I think like one of the issues that we saw was that there was a bit of a complacency with certain Bitcoiners where, like basically to do, you either hodl your Bitcoin, and that's obviously fully self-sovereign, or if you do want to do something, I guess you just have to do that custodially.
Right.
And there was kind of like almost like a acceptance or like complacency, kind of like, okay, well, that's just the way it is.
Right.
That's Bitcoin. And I think that, last year has taught us a lot of very valuable lessons around, when you don't kind of know what's actually going on underneath, like where your returns and yields are coming from, well, then you should be a little bit skeptical, right?
Yeah.
And basically, like, Bitcoin's designed to be programmable money, but all of the things that collapsed last year didn't use the programmable feature, right? Like,
Right.
It was a TradFi setup for Bitcoin, which is meant to be this kind of new age of money, right?
So true. Like they just took the
Yeah.
they just took the extremely powerful programmable money and just had it sit there.
Yes,
And-
exactly.
And then they built a bunch of TradFi lending stuff around it.
Well, it was worse than
it was much worse,
It was
actually.
worse than TradFi
Of course.
because, well, in some ways, because first of all, you don't have like the regulatory frameworks like that we have in TradFi.
Well,
and
let's be
obviously-
real. I would trust like Fidelity with my money more than any of these like
Yes.
lending startups.
Yes.
In fact, I was
Yeah.
talking about this. Here's another thing too. Let's step back a little because I want to think about the DeFi ecosystem and
Sure.
and value proposition just generally as a concept. DeFi, right? And you have the Curve founder, right, who had to he had some loans on his Curve tokens, and that became an issue recently or whatever. Because the Curve, there was a brief vulnerability, and then the thing and whatever, the Curve tokens were going down. He had to sell some, but his were tied up in a lot of DeFi. He had borrowed dollars or stables off of his Curve tokens, right? So he had to, so everyone's watching to make sure he doesn't get liquidated and all that,
Yeah.
right?
Yeah,
And which
yeah,
is the transparency is very exciting. I'll say
Yes.
that, and I think probably a good thing, but exciting no doubt to watch these. Anyway, though, the thing I said was. If Fidelity had accepted, or anyone, I'm just using Fidelity as like an upright traditional institution because I worked there, but if they had accepted, done securities lending, offered securities lending on Curve tokens, I'm sure he'd have preferred to go there. I would, right? And the sort of the corollary to this point is that like DeFi is not challenging TradFi today. DeFi is basically, well, there's some assets that we can't do anything with, so let's build our own place to do it with. We're not bringing in, no one's coming to DeFi because they can't do something here. There was a whole thing when yields existed in DeFi, although most of them was where did the yield come from, right? Mostly like token printing, right? But now there's also better yields in TradFi, so no one's coming. But you have people that own these assets that they can't use in TradFi.
Yeah.
So that's the market for DeFi today.
Yeah.
Do you think that ever changes? Does DeFi merge with TradFi? Does TradFi come use DeFi or whatever? Or are we destined to have these crypto people with tokens that GS and the banks won't lend them on?
Yeah.
Well, you're going to have to use compound finance or whatever, or Curve.
Yeah, I think that's a great question. I think, like, it's one of those things where I think that if there is some kind of incentive for, like, some of these TradFi institutions and they get some kind of, if a lot of their customers are crypto natives, they start demanding it, then I think that's
They
going to
probably
force their
will.
hand. Yeah. So, but without that, I mean, like, why?
Right.
Why would they?
But
right?
so then
Because,
if they do add it, then you don't need the DeFi for it, really. I think there are really good ways when it comes to DeFi, the transparency, knowing for sure what the rules are, right?
Yes.
Like the risk management is it's easy to do risk management in that way because you know exactly the level you are liquidated. Some people say, well, it's responsible in the financial system to be able to call up the lender and like wiggle out of it a little bit if need be. Like we need that flex in the finance. Well, you have that flex. There's still a point where it's automatically, because you know where it's liquidated, you know the exact LTV you have to maintain, and you know with certainty the system, how it will act. Different things. Well, then you just build the buffer above that. You have the flexibility above that point, right? Like, so, and that's very powerful. But again, so there are reasons why like finance could be great in DeFi and should be. But I agree. Like if the TradFi adds support for the assets, that's sort of my point. Is that DeFi is really just tools for these specific assets. If other types of tools like the brokerage firms everyone already uses would let you put those assets there, I think a lot of people would. I don't think we're really at like the step function increase yet in DeFi's capabilities and value proposition to actually say, you know what, no, I don't want to do the lending through this. I would actually prefer to be on chain. But this plays the same thing, right? I mean, you've got Bitcoiners with Bitcoin and know where to do anything with it safely and transparently.
Exactly.
So there's clearly a market, and obviously DeFi is a pretty big market in crypto anyway. But that's what I really struggle with, wondering like the long-term outcome here of, does like DeFi become just like some of the underlying financial plumbing, and like we still just have like the counterparties still run the industry basically? I don't know.
It's a good question. Yeah, I think like as more of the clients that some of these TradFi companies are dealing with, become crypto natives and become like Bitcoin holders, then I think that like there's really kind of no reason why I don't see them demanding more transparency because of all the hard lessons that we're learning as a space right now.
No matter how reputable the TradFi firm is.
Because there's no bailouts in Bitcoin, right? Like basically like if there's a giant mess up, Uncle Sam's not going to compensate you for it.
That's the value proposition.
So exactly.
There's no Fed backstop on Bitcoin.
And so I think that
Satoshi doesn't pop out and like print another 21 million coins.
Exactly. So I think that like folks who are crypto natives and know about these kind of characteristics of Bitcoin, they're going to be the ones demanding more transparency and what have you.
And that group of people is growing too, right?
Yes, absolutely.
In that way too, it's not just the transparency, but it's the non-custodial nature too, right? Like that's really important in your design.
Yeah.
Is that philosophical or is that practical or is it both?
I think that it's we were definitely coming in at it with like philosophical kind of angle. Like how does this mesh with our vision for what Bitcoin's Bitcoin's going to be. Like for us, like we came into Bitcoin and crypto space because of the programmable money aspects of it, where basically like, this is a form of money that you don't need to trust a counterparty or a central party to kind of hold and use, right? And so basically, but where does that boundary of use, where should that be? Because right now, like, you can use it in the sense that you can send it to someone else without trusting a counterparty. But but there's other stuff that you can do with money generally.
Yeah.
If for Bitcoin to be a bona fide financial asset, well, there needs to be financial tools built on Bitcoin. And so far, all those financial tools have been centralized and custodial. And as we kind of know, beyond the black box point as well, like, custodial Bitcoin is fairly easy to confiscate, fairly easy to freeze. And so, to the extent that we can build a alternative that allows folks who want to do it non-custodially to be able to do so, I think that's super crucial to give that alternative.
Love that. Yeah. And it is, I think that is at the core of a Bitcoin value proposition in the scheme of things.
Yeah.
I always say, like, you can hold your Bitcoin at a custodian or you might buy the ETF, right? And that's totally fine. There's different places, reasons, trade-offs to make here and there, but that it is essential that well, every person should know how to self-custody. If they don't, I actually think everyone should have a minimum of some Bitcoin in self-custody because that's actual Bitcoin.
Yes.
If you're
It's not paper Bitcoin.
It's not paper Bitcoin. And by the way, you can use it on the Bitcoin network, okay?
Yeah.
I can't send you my ETF shares globally on Lightning,
Yeah.
right? So like it's not useful in the same way. But I think that, and the same is true, I think, when you think about DeFi here as well, right? Like you may not want to use it for this, but you sometimes should. And maintaining the optionality. This is what I was going to say. Maintaining the optionality.
Yeah.
And by the way, aggressively lobbying for that protection in law, right? Like, I don't care necessarily if everyone self-custodies, but I care very much that everyone can self-custody.
Yes.
Because that's that exit valve. That's the check on the system.
Yes, exactly. Like basically, like for if we're talking about Bitcoin as digital gold, well, okay, what happened with gold, right? Okay, folks can store it easily, but if you wanted to use it as collateral for a loan,
right?
If you wanted to
put it on like a horse-drawn carriage and cart it down to the bank, it's heavy.
Yeah, well, that was the advantage that Bitcoin gave us because it was a lot more portable and divisible and all that kind of stuff. But then with gold, like to do financial tools with it, you obviously had to give it to a custodian. You had to entrust them with it, and you get back your paper gold or what have you. And basically, that's currently the status quo for Bitcoin as well. We did not improve on that so far.
Right.
But
it's much more programmable. Surely we must have ways.
Well, DLCs.
There you go. I know.
Yeah.
I love it.
Yeah. But I think that we should be pushing the boundaries more of some of the programmable aspects of Bitcoin that are still underexplored. And should be explored.
Yeah. Have you looked into like how deep are you in like Taproot, TapScript type stuff that people are?
Yeah.
I mean, this is really elite advanced stuff. But like Rob Hamilton at Anchor Watch is a friend. He's been on the show a couple times, or once on the show. And like, have you seen his mini script? Have you seen all the stuff on mini script?
I have seen some.
I mean, it's really actually incredible how powerful Bitcoin script actually is. It's just very difficult.
Yes.
Mini script makes it a lot easier. And I mean, Rob's coming up with like incredible, like decaying multi-sigs, multi-threshold decaying multi-sigs, big giant quorums that have sub-quorums and like which apparently you can actually already do. It's just like it was too complicated to even develop without using Miniscript, which is the like sort of higher level language that Andrew Polstra created.
Right.
Literally, you can do a lot of what people thought we needed covenants for, and like OpsCTV. Not all of it, obviously, but like you can do a lot. Again, so that's you talk about pushing the boundaries of Bitcoin's programmability. Like there are a lot of people working on that now. It makes me really happy.
Yeah.
We don't have to have the debate about what's good and bad to do on Bitcoin, blah, blah, blah. Like I'm not talking about, really I'm talking about using stuff you can do on Bitcoin right now. I'm not, forget like what we want. We're not calling for an upgrade. I'm saying you can actually, Bitcoin is highly programmable money. But a lot of people really are just stacking and hodling, which is fine. But like, it really hasn't had Bitcoin, the builder culture that say Ethereum has, to have a lot of other people build other things using a lot of these tools. I mean, there's literally opcodes no one uses. Like,
I mean, that's coming from Ethereum as a builder there. Like that was definitely something I noticed in terms of the difference in culture, right? Like in Ethereum, I mean, say what you will about obviously the quality of the base layer, how decentralized it is, and these kinds of things.
Sure.
But in terms of culture, there was very much a kind of builder-centric culture encouraging experimentation, lots of hackathons, lots of grants, and these kinds of things, encouraging folks to try different things and innovate, really. And in Bitcoin, definitely is less of that, right? Like even if we just look at
and obviously there is great stuff, right?
Yeah.
Like, but it's not nearly as much, I would say.
Not at the same level.
Right? I mean, you have great stuff. Pleb,
hopefully we can encourage more and
like you have like
Pleb.
I mean, Jeremy Rubin's thing. You have Bitcoin Plus and like TabConf. You have Wolf Incubator. I mean, there's plenty. You have all the,
and it's growing.
Yeah, it's growing. But I agree, right? I think it's quite different, and it's because also I think people looked at Bitcoin and said, well, you can't really. It's Bitcoin. It's for that one thing, and you can't really program that much on it. That's what they would say. It's just not true.
But
it's just not true.
Yeah,
and it's not true.
I mean, when I was in
we
Ethereum,
don't have persistent like state like smart contracts.
Yes.
That's what we don't have.
That's yes.
But it's still highly programmable.
Yes.
Yeah.
I mean, when I was like in the Ethereum ecosystem, that was like the narrative around Bitcoin. Oh, it's just a shiny rock. You can't
Right.
do
They
much
call it a
with
pet rock.
Yeah, pet rock. Exactly.
Rolling my eyes to the audio, the audio audience. Yeah, it's just, so. What else have you noticed, by the way, for this trend? And also, what else are your thoughts about ETH versus Bitcoin? I'm personally of the view that they're not competitive. So I don't like the two very different projects. And
Yes.
So I don't usually, but like, how do you think about them?
I think that like, I mean, there's the dev angle, like tooling and all that kind of stuff is way like
Very advanced.
Very advanced.
Yeah.
And there was the money to do that, partially because of how they launched Ethereum,
Sure.
right? And so basically like that side of things is very well developed in Ethereum and easier to get started as a developer. I mean, you can be a JavaScript developer, and JavaScript's, basically every computer science student learns how to do JavaScript these days. And you can be a JavaScript developer and basically start programming Ethereum Solidity smart contracts that can move millions of dollars. Right? It's pretty crazy, actually.
So from a dev culture, it's easy to onboard.
It's easy to onboard, that's for sure. But, of course, that comes with the drawbacks.
Then you have a bunch of junior JavaScript developers making permissionless finance apps that break that
are losing people millions or even hundreds of millions.
There's a lot of risk there.
There's a lot of risk. So there's a trade-off there. I think that like I think that what we really need to kind of push harder on the Bitcoin side of things is bringing back the spirit of experimentation, and kind of encouraging folks to try different use cases out. Because on Bitcoin, I think like I'm a product person, so I think about things from a product perspective. Bitcoin has reached product market fit with being a store of value asset, something that people can easily buy and hold, right? And hopefully, and wait for a number to go up and these kinds of things. I think that, but like, why don't we kind of explore, whether we can get product market fit in other areas in Bitcoin as well, right? Like obviously we have the ordinals movement and the collectibles and whatnot, and why can't Bitcoin also serve as a DeFi layer, right? And so we don't want to be, because the thing I sometimes worry about is like, what if we stick to the status quo with this? This is something you just buy and hodl and wait for a number to go up. But what if, because we're constrained by that narrative, we hit a local maximum and we don't actually reach the full potential for Bitcoin? Because take another decentralized protocol, the internet, right? The first use cases were obviously a very small subset of the current use cases. And because we allow folks to experiment with different use cases and try new things, obviously that brought more people onto the internet, because that was like, hey, that's a useful thing.
And we end up so far from ARPANET, like sending messages from like Cal Berkeley or wherever.
Exactly.
That's it for this week's episode of Galaxy Brains. Thanks to our guest, Tony Cai from Atomic Finance, and Beimnet Abebe from Galaxy Trading, as always. Everyone have a great weekend, and we'll catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.